What a rough ending to the markets today, guys. It was just bad out there. That's all I'm going to say. We got to break down what went down at the end of the day today. We're going to go over what caused this drop. And of course, we have to break down an earnings report from IBM and some other stocks that I'm looking at and what I'm looking to do in the markets. But before we do, make sure to get your 10 stocks from Moomoo with a $100 deposit. Each of those could be valued up to $2,500. And do not forget to also get your 6 stocks from Webull with any amount deposited. All of those free stocks are linked down below. And just know, guys, those links in the description box, they help me out a lot. And I do appreciate you, because without you guys watching, this would not be possible. So cheers to that. And yes, I do have water here in this tall beer glass. So with that being said, let's just dive into the video. So we were up earlier in the day. You guys know that SPY, Triple Q, the Russell, the Dow, everything was up earlier in the day. And then we got a catalyst from Apple, which ended up causing this drop. SPY went from 388 at about 12:45, 1 p.m. on the East Coast, and it went all the way down to $380 just about 10 minutes before the close. We're talking about a 2% drop in just the span of a couple of hours. And that's not that bad compared to Triple Q, which in that same time period, this thing went down more like almost 7% from about 295 to $288 just 8 to 10 minutes before the close. And believe it or not, guys, I think the Dow, actually none of them closed green. I think in my last video, the Russell was up 0.5%, but that ended up closing red. We got the Russell. This went down 0.3%. The NASDAQ went down 0.9% on the close. The S&P down 0.8%, as the Dow went down 0.7%. And the VIX didn't go up as much as you would have thought. I mean, it still had a decent green day, I guess you could say. The VIX went up 4.4%. We had silver down 1%. Gold down 0.25%, and we'll take a look at Bitcoin and Ethereum here in a couple of minutes, which those guys are absolutely freaking ripping, and we call that out. But make sure you guys stick on. We'll talk about stick on throughout here. We're gonna break that down in a couple of minutes. So right now we're clearly getting selling pressure at the top of the wedge here on the 20-day chart, both on Triple Q and SPY, like I said, right? And the fact that we closed under the moving averages on SPY, that's not good. And I think Triple Q did as well. Yeah, it did as well, guys. Closed just ever so slightly under both moving averages on this 20-day chart. So we could thank that the sell-off to Apple. And we all know a lot of companies have been laying off employees, slowing down hiring. We've been hearing this left and right from a lot of different companies. And the truth is, these companies, they hired way too aggressively during the pandemic, right? Way too aggressively. Tesla being a great example as well. A lot of these companies, they just got too bloated, and now that the growth is not the same, the economy is slouching a bit, they got to trim the fat. That's what's going on. And we got news from Apple that the company plans to slow hiring and spending growth in 2023 in reaction to a potential economic slowdown. And mind you guys, this hits the markets hard because Apple is the biggest company at the end of the day in the stock market, right? The U.S. stock market. So Let's see. According to Bloomberg, the move stems from a decision to take a more careful approach in uncertain times. The article, which attributed to, quote, people with knowledge of the matter, unquote, says the move won't affect all teams, noting that Apple still plans to launch a mixed reality headset in 2023. So I want to look deeper into that and see, what teams, what segments it's going to affect the most. I'm sure this will come out in due time, right? And the company couldn't immediately be reached for a comment. So this is fresh news, and the market at the end of the day was, I feel like, looking for a reason to sell off, and today it got that reason, guys. So a lot of these companies got way too bloated, and this is not a surprise for me at all. I mean, to be honest, it shouldn't be a surprise to you either. The only reason why the markets are reacting like this, well, one of the biggest reasons is the fact that Apple, again, is the biggest company in the US, right? So let's see what's going on here on the chart. It's still under $150, which was resistance in the end of May, early June. That needs to break in the short term. And with the catalyst we got today, guys, it got rejected at 150. Now Apple's back at about $147. So let's see what it does right around the moving averages here on the 4-hour chart, which is right where Apple is right now. So that's kind of, nothing really has changed from when I talked about it last. So that's kind of a quick little breakdown on what's going on with Apple, why the market sold off. Let me know your thoughts down below in the comments. And don't think I forgot about crypto. Let's go and see what's going on these crypto charts, guys, because we're seeing a lot of upside momentum. Bitcoin right now is at $22,500. It is up 8.5% on the day. And what we're noticing is we are now slowly breaking out of the top of the channel. Do you guys remember I was talking about the horizontal channel that Bitcoin has been trading in, and Ethereum, but Ethereum now is way above it. It broke out. We'll talk about that in a second. These have been trading in this channel since the beginning, more like the middle of June. And now BTC is testing the top of it. No joke. 22,500 to 700. This is a breakout zone for Bitcoin. If it breaks 23,000, there's going to be more upside. I feel like it could start going. I think I mentioned this in my video yesterday. 27, maybe 27-ish thousand. That's where it could start moving. Definitely mid-20s, 25, 24, 25. Let's see what it does at that point. And Ethereum today, guys, brace yourselves. This thing is up a whopping 17% last I checked. Yeah, oh, wow. 19% now. 19 freaking percent. And I think I mentioned this in my last video. And in my last video, mind you guys, Ethereum was at maybe 1,300. I said the upside gap for this to fill was 1,700 on the higher end, 16 on the lower end, 1,550, and that's exactly where we are right now, just in a day. This is crazy. Did I think it was going to happen this fast? No, but we got that rally. And there could be more juice left in it. We're under 1,600 now. This thing could go to 1,700, but if it gets to 17, 18-ish hundred, that's going to be a big resistance based on this chart here. You guys can see early June, all throughout May as well. Ethereum was holding 1,700, then it ran up, and this was in 2021, by the way. Let me mention that we were holding 1,700, and then this thing ran to about 5,000, and then we also consolidated at about 1,700 2 months ago, about a month and a half, 2 months ago, before it collapsed down to about 880. So at this point, guys, don't be surprised if we get selling pressure around 1,800. But in the meantime, there could be a little bit more upside to those levels. And it's just crazy to think that Ethereum pretty much, I don't want to say it doubled up. It might have almost doubled up. Let me see here. Did it hit 880? What was it? Yeah, 880, guys, to 1,600. It's almost gone up 100%. Not quite yet. Not quite, but it's getting pretty dang close, which is just crazy. So if you guys want 6 stocks from this platform right here, Webull, before we go to these other stocks, make sure, or to the stock portion of the video, make sure to get your 6 free stocks from Webull, link down below, with any amount deposited. It's literally free money, guys. So with that being said, let's jump back to ThinkOrSwim, which is right here, the platform that you're seeing right now, and let's break down what's going on with some of these stocks. We had IBM report today, and that stock is it's not looking good, guys. They closed down 1.3% on the day, right above $138 a share, and now the stock is down to $132 a share. It's down about 4% here in the aftermarket hour. So IBM did $2.31 versus $2.28 EPS, so they actually beat. And they beat on revenue, $15.5 billion versus $15.25 billion. So they double beat. And honestly, I was looking for a reason why it's selling off. I was looking for the guidance. I didn't necessarily see anything on guidance. So I'm asking myself, why is it selling off? And the truth is, guys, we don't have to have an answer to every question in the stock market. sometimes there's just no explanation. And I feel like that could be what we're seeing right now. Maybe the stock got a bit too hot. It priced in too much growth, or maybe a bigger beat than what we got, and then we ended up selling off. At the end of the day, there's not necessarily a distinct answer to every question in the stock market. Sometimes things, again, just happen, and you don't know why they happen. And in this case, believe it or not, it's actually not that hard to believe because this chart looks pretty good. IBM is still holding an uptrend. Look, right around $130, which is where we are now in the aftermarket. If we get buyers here, even if this thing comes down to $128, $130, if we get buyers here, this is going to be a point where, hey, we might be going back up, after a couple of, days of consolidation. Maybe we have to give it a little bit of time for the dust to settle. There could be a move coming, maybe a relief rally. Let's see. IBM, let's see, guys. Don't throw it off your watch list just because it's down a little bit. It could still be an opportunity. Enphase, I think, is going to be an opportunity here in the next couple of days. Today, Enphase had a 6% green day, and I almost forgot to mention this. They report earnings, not this week, but next week. It looks like next Tuesday, Enphase is reporting earnings. And look at where it is right now, guys. $206 a share. The resistance here from the beginning of April has been 220, and we have an ascending triangle forming. I've called this out time and time again on the channel, but it hasn't played out yet, and I do believe it is going to play out. Well, I don't want to say for sure. I can't give you guys, first of all, I can't give you guys financial advice. I'm not telling you what to do. Keep that in mind. You must always do your own research, and nothing's guaranteed in the markets, but I'm personally confident that we could see a push past 220 on this stock. And if that does come, who knows where it's going to go from there. Again, we can't predict the future, but I think momentum could take it mid-200s at least. 250, I think that's where it could be going. So Enphase, my alert's at 220, and I'm just patiently waiting for that break to come, which, again, it's not guaranteed, but I'm confident. I have a good feeling that it could be coming, and we have to wait for the technicals to confirm that, right? So the next one here, which I've been calling out left and right, it's been crushing it. It's AMC, guys. Yes, we got to talk about AMC again. This thing went up 7.6% on the day, closed at $16 and roughly 50 cents. And what we're noticing here is this tested $17, failed, sold off, and you would have thought maybe it would have tanked even more heading into close, but buyer stepped in and held it above 16 and pushed it to the mid-16s right before close. This, in my eyes, is very good. Very good for the bulls, right? If this thing collapsed under 16, it'd be a different story, right? But the fact that we had momentum, not even momentum, but consolidation and buyers coming in before close above the mid-16s, this is a good sign. So in the meantime, in the short term here, I'm watching 17 like a hawk. If this thing breaks 17, I'm going to say it till I'm blue in the face, guys. Call me crazy, but, and mind you, this is very speculative. I wouldn't play AMC or any of the meme stocks with a serious amount of money. Me personally, I would only put a very small amount of money that I'm willing to lose. Let me just put that out there. AMC, if it breaks 17, I feel like we could be going to the 20s again. Call me crazy, but that's what I'm thinking here based on this chart. So we're watching AMC along with Enphase and IBM and, of course, Apple. And we have these energy stocks that I'm watching as well. Crude oil right now has been holding above 95 for about, how long has it been? About a week or two? Yeah, almost 2 weeks at this point. We've held above 95, which is good considering, and I've mentioned this before, but I'll say it again, considering crude oil has held crude oil 95. I mean, it's held that for 5 months, almost, well, more like 4 months at this point. So we're getting buyers, supporter above 95, which is great. So if crude oil could break above 100, that's going to be a good sign for the bulls. And we have some of these energy stocks looking pretty good in my opinion. Occidental Petroleum had a 2.3% green day today. It's slowly breaking out of the wedge here on the 4-hour chart, but we're not quite yet out of the 180 SMA, which you guys can see that's been resistance for a good about a month, a little bit over a month at this point. So if Oxy could break out of, let's say, 63.50 mid-60s. There could be a big push on that one, in my opinion. ExxonMobil is also looking pretty decent. You know, we found support at $80. Now we're in the mid-80s. If this cracks 90, breaks the 180 SMA, there could be more upside on Occidental and along with ExxonMobil, right? Hess is another one. HES. Excuse me, guys. Let me get some water. I don't know why I just said that. But Hess Corporation went up 5% on the day today, and you guys can see it is getting some buying pressure around $90, which has been support for pretty much this whole year. So that's good. So if we get a move, I'm gonna say past $100, $102, I'm gonna put my alert at $102. Let's say we gap out of that 50 SMA resistance here. This could maybe start running probably $110, $115. So these energy stocks, do not count them out, guys. When there's blood in the streets, which in this case, the energy stocks, I mean, yeah, over the past couple of months, they're still massively up. But recently, there's blood in the streets. I feel like it could be an opportunity. Call me crazy. Let me know your thoughts in the comments, but I think it could be an opportunity. And the last one for this video, guys, I don't want to be too long in this video. We're already about 16 minutes in. We might as well slowly wrap it up. If you guys stuck till the end, let me know in the comments. Airbnb had a 3% green day today, and I do believe it was above $100 earlier in the day momentarily. Yeah, look at that. 101, almost $102 a share earlier in the day. Then it ended up selling off. So at this point, Airbnb is under a big moving average resistance, right around the $105 level. That's going to be a sticking point. So for now, I'm going to keep, or rather set an alert at $105, right? If we start moving out of the moving average here, there could be a relief rally potentially towards the top of this channel, which could have us anywhere from $125 to $135 a share. That could be a push of maybe anywhere from 15 to 20% if things get really hot. We shall see, guys. So with that being said, Airbnb, Hess, ExxonMobil, Oxy, AMC, Enphase, IBM, and Apple. Those are the stocks that we broke down in this video. If you all enjoyed this video, hit the like button. Make sure to subscribe. Let me know your thoughts in the comments. And join my Patreon if you want all my moves in the markets. That's linked down below. You get exclusive videos as well. More access to me throughout the day. And do not forget to get your 10 stocks from Moomoo with a $100 deposit and your 6 stocks from Webull with any amount deposited. All those free stocks. I know you guys want some free stocks. They're linked down below. And with that being said, cheers. I'll catch you in the next video, guys. See you tomorrow. Peace out.